Bitcoin season is officially confirmed. And in this video, I'm going to talk about all the reasons why. Guys, last week I talked about how it was crypto week and we had these three big bills going to get voted on. Things are moving along. Markets are pumping. We got Bitcoin still rising. We actually have the crypto market for the first time in a long time in uncharted territory. The entire market as a whole is at all-time highs. So in this video, I'm going to revisit the topic of the bills that's passed, what still needs to happen, give you some timelines, and then go into more detail on these bills and the implications that I think they can have on the market. We're going to look at some charts. I'm going to give you guys my pulse of the market, what you should be doing. Obviously, none of this is financial advice, but let's just jump straight into the video. This time, we're going to start with some charts, and I'm going to circle back to the bills at the end of the video. So first, I want to check the pulse of the market. We're looking at the crypto fear and greed index. You know, they say buy when it's blood in the streets, buy when people are fearful, and sell when people are greedy, right? Investing is that one thing where you have to be a contrarian. You have to be willing to bet against the consensus and still be right. And you have to bet against your emotions, you know? So you can see here that we're still at 67% greed, which I'm quite surprised with all the things that's been happening. So this tells me that market still has some good room to go. If we look at the Bitcoin ETF inflows, we still have a good amount of inflows. We did kind of slow down a little bit, but we still have, you know, over $300 million in inflows, you know, so still taking Bitcoin off the market. And if we look at Ethereum, we have Ethereum ETF inflows still up, albeit not as much as it was last week. But these things don't always just go up and to the right. And if we look here, we have 402 million in ETH inflows, where on the Bitcoin when we just saw, it was less than that. So we're starting to see Ethereum ETF inflows actually increase. Last week I covered how companies are starting to add Ethereum as their treasury, not just companies, but governments as well. And this gray line represents ETH's price is still rising. So let's go over and look at some charts. So we got the M2 money supply still up. Obviously that correlates with liquidity. And as this keeps rising, we know that Bitcoin follows, which means crypto follows Bitcoin. Bitcoin tracks the liquidity in the market. It's usually lagged around 3 months. So as this continues to rise, you can expect Bitcoin to continue to rise as well. And that doesn't mean there won't be corrections, but I'm just talking about overall sentiment. We got the stock market at all-time highs. The S&P is at an all-time high. Crypto does follow the stock market as well. We got the Dow Jones near all-time high levels. We got the NASDAQ at an all-time high. And if we look at Bitcoin, we're starting to consolidate around the 118K level, right? So Bitcoin is literally in uncharted territory, right? It's in what's called price discovery mode, right? The market likes to move between ceilings and floors, but it just broke through a new ceiling, so it's trying to create a new floor. You know, I wouldn't be surprised if we came back down to 110 as we go to our target of around 135 minimum, 150 maximum is what I'm estimating. And this is good because the more Bitcoin rises, the more liquidity that can flow out of it into altcoins. If we look at Ethereum, look at this chart, right? Just going straight up, right? We're at 3,800 bucks. We're nearing a local top here, right? 4K, we haven't seen that since around December. And before that, March, and then obviously June as well. All-time highs is around 5K. If we zoom out here, this is the all-time high for ETH. Almost 5K, 4,800. Now, you see these steep green candles here, right? Now, I would expect Ethereum to kind of come back down and correct before it continues to go up, right? You see here, you had these big green pump right here, came way back down, and we still came back up, right? Things need to reset, and we finally had our 62 EMA, our orange line, which is rolling Fibonacci, get on top of our 200-day moving average. And as you can see, anytime it's on top, the market is pumping, right? And we have this just going straight up. So that's a really good sign. This is what I was saying in regards to price discovery mode. This is the total crypto market cap. It's at $3.8 trillion. It's never been this high in the history of crypto. And we're getting back inside of our trend line here that we were in during the 2021 cycle, which was the last major bull rally. So I expect us to operate into this channel as we continue into the bull market, and to get back to the top of the channel is a 34% increase, which will bring the crypto market cap to around 4.9 trillion. I wouldn't be surprised if it gets over the top of the channel as well. The reason why is because of these bills that were just passing that we're going to get into here in a bit. Also, this is a good sign as well. We have stablecoin dominance dropping. When stablecoin dominance is dropping, that means people are selling stablecoins to get into altcoins. We were inside of this channel for a long time, so the fact that we're breaking out to the downside is a really good sign. I expect that to continue. Same thing with USDC. You just see this kind of breaking, and we're seeing a cross here. So that means people are also selling USDC to get into crypto. We want to look at Bitcoin dominance. Look at this, guys. This is a really good sign. Okay. Now, these red lines on this chart represent the Bitcoin halving. Let me zoom out. The red lines on the chart represent the Bitcoin halving, and this is Bitcoin dominance. The higher it is, that means Bitcoin makes up most of the market. When it drops, each time it dropped after the halving, this was altcoin season. People sold their Bitcoin for altcoins, and this is what happened here. This is what happened here. And we've been waiting on this to happen for this cycle, right? So if we zoom out, it's not a crazy drop yet like this, but that's what has to happen. And, you know, we had a few fake outs, right? We had a fake out here, but you can see how this one was kind of choppy. If we zoom in on this one, you see it straight down. I'm gonna go back to the daily, right? You see how there were still some green candles in here. You got a green one here, you got a green one here, you got a green one here, and it had green at the bottom. And you can see how it was more of the fall was more angular like this. Like you see how this fall is down at an angle. This one, straight down. And also, you don't see a single green candle for this past, week that this has been dropping. Now, in order to confirm this, just like we saw back here, I want to see it break, right? We need to see this cross, right? We need to have this blue line on top of the orange line. And we're starting to see our orange line start to drop. We want to see this cross, and also we want to see a break and come back and retest this and then drop. So we got our clean break. I expect Bitcoin, as Bitcoin rallies to 135, 150, the dominance is going to take over or increase again. I expect us to come back up, touch this line, and then free fall, and then altcoin season. I'm still expecting this this summer, this fall. And with these bills that's passing and an executive order rumor that I'm going to tell you guys about, I expect this to not only potentially happen sooner, but also go for a longer period versus last time. I think they want the altcoin cycle to go longer so they can make some money. Here's another chart that's finally breaking out. I'm going to zoom out here. This is the ETH to BTC chart, guys. And this chart is Ethereum versus Bitcoin. So in every major cycle, Ethereum always outperforms Bitcoin. People always talk about something called the flippening, which is when Ethereum's market cap is going to top Bitcoin. It's just a matter of when, not if. Bitcoin is a store of value, is meant to store your value long term. Ethereum is a platform where applications can be built on. So all this DeFi stuff, NFT stuff, tokenization from firms like BlackRock and all the companies that are cited to put real estate on a blockchain, that's going to happen on a blockchain like Ethereum, not Bitcoin. Utility, which is what Ethereum is, always trumps store value. Bitcoin, digital gold, Ethereum, digital oil. Oil has multiple use cases. It's used in roads, hair, plastic. Ethereum has multiple use cases as well. And if you look at the real world and you compare oil to gold, oil is worth more than not just gold, it's worth more than all precious metals combined because it has so many use cases. So it's just a matter of when. So now this has been like dropping. Bitcoin has been outperforming Ethereum literally since 2022 has been dropping, right? And we now have a clean break to the upside. Like look, we haven't had a pump this hard since around here, but it came right back down, right? And it wasn't as aggressive. Okay, so I wouldn't be surprised if we came back down, touched our 200-day, but eventually we're going to get back up on this trend line that we've been on literally since 2015, 2016, and we're going to start making our way. And Ethereum, I'm still calling for a minimum 9K ETH this cycle, maximum 15K ETH. We're going to see this chart start to do one of these, and it's going to get back up to these levels, and I think that it's even going to surpass them. So right now, couldn't be a better time to sell your Bitcoin for Ethereum, because from here until the end of the bull market, whenever that is, Ethereum will give you a better return than Bitcoin. Okay, so now that we went through all that, let's talk about these bills. So first, let's start with the Genius Act. The Genius Act was passed by the Senate. We already know Trump's bullish on it, so it's literally just awaiting his signature. The Clarity Act and the Anti-CBDC Act was passed by the House, and now we're just waiting on the Senate to vote. And the fact that we have the Genius Act passed is going to make it easier for these two to get passed. I would be really surprised if they didn't get passed. And again, once they get passed, then it's going to have to be rules and regulations around them. And I'm guessing that these are going to all be put in place and established between 90 to 120 days, which puts us at Q4, like I've been talking about. And this is why I think the altcoin cycle will be extended. There's never been an altcoin cycle where there's clear rules to the game, right? You have these institutions who have been on the sidelines because they don't want to get sued, right? It's literally like there's this game called crypto that you can play, but you step on the field and you might do some move, like think of a football game, you might do some move and now boom, flag. And you're like, man, I didn't even know what the penalty was. There's no rules. And institutions, how they operate, they don't want to get sued and lose money. They're worried about maintaining what they have versus how much they can gain because they're managing billions or trillions of dollars. They're not worried about the next 100x because you can get 10% on billions and that's hundreds of millions. That's all they care about. They're making their fees. Warren Buffett's 2 rules. 1, don't lose money. Number 2, remember rule number 1. So the fact that we have clear guidelines now, institutions are going to be able to play without worrying about getting sued because if they get sued, they lose money for their investors and then they're on the hook for taking risks. Now it's not as much of a risk. That's huge. It's gonna be billions of trillions of dollars that's gonna flow into crypto because we have rules established and institutions can play comfortably. So now here's a bombshell. The US government is literally creating a stablecoin monopoly, but they're not gonna call it that. So it's like the Genius Act doesn't just regulate stablecoins, it bans all up unapproved issuers. After a 3-year phase out, they make it illegal to even offer stablecoins from foreign issuers unless they meet US standards and are registered domestically. So this is going to eliminate decentralized stablecoins and it's going to completely shut down algorithmic or crypto native stablecoins unless they submit to bank level regulation, which most of them aren't. In section 3.8, it says, it shall be unlawful for any person, this is straight from the bill, it shall be unlawful for any person other than a permitted payment stablecoin issuer to issue a payment stablecoin in the United States. Such tokens lose legal standing as cash equivalents, collateral, or settlement assets. Guys, the only regulated stablecoin currently is USDC, right? And if you look at Coinbase is a part owner of Circle, so they get a piece of all the USDC revenue. They're in the top 20. Let this sink in. Coinbase is in the top 20 of institutions that hold government debt. They're literally in bed with the Federal Reserve. So that means when you go on Coinbase and you give them your US dollars, they're taking your US dollars, they give you a USDC stable coin, they take your dollars and they go and buy government debt and they get a return and they keep most of the return and give you a small yield. So by them having this stable coin, it's already at what, $20 billion or something like that. It's going to increase. They're the only regulated stable coin, right? Coinbase is always aimed to be the white knight of crypto, the regulatory compliant exchange. It's literally going to help bring more liquidity into the United States. This is literally strengthening the dollar, and it's going to help it last longer. Like, I read a really good book called Principles for Navigating Big Debt Crises by Ray Dalio, and inside he studied all the currency collapses in the modern age. And the thing behind it was that currencies collapse when they're not required to be bought to buy things, if that makes sense. So like the United States dollar is also the petrodollar, like all the oil that gets bought, US dollar has to be used, right? And then you have all these US treasuries, all these different countries are holding US debt because people want exposure to United States financial system. But the theme with all those currency collapses that is different now, there wasn't technology, right? So stable coins, there wasn't a way to where, you know, the Great British Pound could have easily make it so that people in America and other states can own the stable coins and they make fees off of all these transactions, right? Blockchains really changed the game and it really is different this time. And people always say, oh, this time's different, but this time's really different. The United States is extending the dollar and I would be surprised if the dollar fails in our lifetime because of stable coins. As crazy as that sounds. And if you look at United States USDT Tether, which is the largest stablecoin right now by market cap, I wouldn't be surprised if it went away in 3-4 years because it's going to be a 3-year phase out. It's not regulated in the United States. You know, we still don't really know who the founders are. So they're literally trying to make USDC the stablecoin. And this is not the first time this happened. They're like when the dollar was called greenbacks back in the day, The greenback is what ended up turning to the dollar, but back then banks could issue their own currencies, right? And you had all these banks issuing their form of dollars, and you know when they all went away? When regulation came in and they said, hey, this greenback United States dollar, this is declared legal tender. And when something is declared legal tender, that means that you can only pay your taxes in that medium. And whatever currency or medium of exchange people need to have in order to pay taxes, they're going to accumulate it through hell and high water, because if you don't pay taxes, you go to jail and get taken away from your family, and that's everyone's biggest fear. So this same thing is happening now. All these stable coins are going to get phased out, and there's going to be a clear winner. Just like there is one United States dollar, there's going to be one stable coin that represents the United States dollar, and I'm betting that it's going to be USDC. Going back to Tether, I already explained that they have to be, regulated. The United States have to approve it and all that stuff. Failure to register, they're going to be banned from exchanges, right? And if you can't be used on exchanges, like, it's going to fall pretty quick. And if the value of the Tether falls, it's going to affect crypto hugely, right? Not as much as it would years ago, because USDC, like, a lot of money is just going to flow into USDC, but they're going to be banned from exchanges, and they're going to be legally unusable for US trading platforms, institutions, and cross-border settlements, right? So it's going to be illegal to use Tether and these other major stablecoins that are being used a lot right now. So now here's something that no one's talking about. This is a rumor, right? So it could be the buy the rumor, sell the news. It's going to happen eventually. It may not happen this way, but it's a rumor that Donald Trump is going to issue an executive order that could trans 401k plans by allowing crypto, gold, and private equity access. And they're saying this can unlock $9 trillion. So on July 16th, Fox Business and Wall Street Journal reported that Trump's preparing this executive order to allow crypto, gold, private equity, and 401ks. July 17th, the Financial Times confirms that the order is expected to be signed as early as that day. It hasn't been signed, but a lot of times when these things get called out with time frames, it's delayed anyway. And the goal is to unlock this $9 trillion in retirement for altcoins and Bitcoin, right? And then Barron's and other major news articles said that the executive order is imminent, but there's no public signing or official text yet, but it's widely expected this week, crypto week. Guys, if we get that passed, this is going to be huge. And the reason why is because it's $9 trillion is a lot. I told you the whole crypto market is 3.9 trillion right now. So that's the 3x of the current size of the entire crypto market. But like I said, it's not going to be all crypto. It's private equity, gold, and stocks, but crypto is where everyone wants to be right now because everything's popping off. So even if there's a 1% allocation into crypto, that's $90 billion in inflow. And once that 90 billion flows in, people are going to get greedy, and it's going to attract a lot more capital than that. So we know Trump is super bullish on crypto. 60% of his net worth has been made from crypto, and within the last year. So I know at some point during his term, he's going to make it so that retirements, 401k, pensions, all these large institutional investors, he's going to create a framework whereby they can own crypto and be able to own it for a long time. Like by the time Trump gets out of office, crypto is going to be sitting pretty. Maybe not from a price standpoint. I don't know where the market's going to be, but from a regulation, rules to the game, clear, everyone knows what they can and can't do. I can guarantee that that's going to be solid. So with that, I'd like to wrap this video up. If you got value, like, comment, subscribe, share with a friend. I am in Marseille, France. I had to get this video done here in this not so cool hotel background. I know it's not my usual setup, but I'm about to go out here and enjoy the town, but I had to get this out to y'all because stuff is crazy right now. So with that, thank you so much. Love all of you who's watching, and I'll see you next week for the next macro update. Take care and trade safe.